We're going live in 4 seconds. Good evening, everyone, and welcome to ANMI's 141st Knowledge Series. We have actually come a long way through our knowledge series, and thankful to all the members who are participating every time with us in our knowledge series. Today, we have a registration of 260 plus participants who have registered, and still they are coming in. Thank you to all the participants for being with us in this webinar today. Today we have a very special topic, which we are coming up with in association with NSE, and the topic we have is Indian ETF industry landscape and new innovative Nifty Indices. Today we have with us Mr. Pawan Bagri, promoter director of Parvati Capital Market, based in Calcutta, with over 25 years of experience in stock market and running prop desk with active participation in all segments. He's been involved with ANMI from last 7 to 8 years, and that's a big, long years to be with ANMI, being chairman of ANMI ERC, and twice he was a board of director. Welcome to the webinar, sir. And
thank you, Mr. Pillai.
It's in fact a great moment for us to have Mr. Mukesh Agarwal, the CEO Indices and Data from NSE. Mr. Agarwal is a business leader in 3 decades of experience in financial service industry, including indices, mutual funds research, equity research, fixed income research, industry research, and credit ratings. Mr. Mukesh has been a part of various regulatory committees, subcommittees in India on topics related to indices, bond markets, mutual funds, passive funds, etc. Mr. Mukesh is also presently the Managing Director and CEO of NSE Indices Limited and NSE Data and Analytics Limited, wholly owned subsidiaries of National Stock Exchange of India, India's largest stock exchange. Previously, Mr. Mukesh was president of NSEIL Limited, a Standard and Poor's company, and was leading their India research business with full P&L responsibility. He worked with CRISIL for 20 years in various functions, including credit ratings for 15 years. He was also has a master's degree in management studies from SP Jain Institute of Management and Research, Mumbai, India, and bachelor's degree in electrical and electronics engineering from Birla Institute of Technology and Science, Pilani, Rajasthan, India. Welcome to the webinar, sir. It's a pleasure to have you this evening with us, sir.
Thank you very much.
I hand over to Mr. Pawan Bagri, who will take on the show with his welcome address. Please, sir, hand over to you.
Hello, friends. Hello, everyone. This is Pawan Kumar Bagri from Parvati Capital. And on behalf of ANMI, I welcome Ms. Mukesh ji and all our guests who are in this program. Just a little brief about the ANMI. See, there are around about 900 members of the NSE. उस 900 मेंबर्स को लेके जो एक ग्रुप बना है, एक एसोसिएशन है, वो एनमी, दैट इज एसोसिएशन ऑफ नेशनल मेंबर्स ऑफ इंडिया लिमिटेड. सो अंडर द बैनर ऑफ एनमी हम लोग साल भर काफी एजुकेटिव प्रोग्राम्स करते रहते हैं, जो कि मेंबर्स, क्लाइंट्स और मार्केट पार्टिसिपेंट्स का नॉलेज गेन हो. और इसमें लाइक हम लोगों का एक सिग्नेचर प्रोग्राम होता है, कन्वेंशन, जो साल में एक बार होता है, जिसमें ऑल एमआईज, रेगुलेटर्स, एवरीबडी अटेंड. साल में एक हम लोग टेक फेयर करते हैं, जिसमें लेटेस्ट टेक्नोलॉजी क्या आने वाली है उसके बारे में एक अच्छा डिस्क्रिप्शन रहता है. बट आज का प्रोग्राम, दिस इज द फर्स्ट टाइम वी आर डूइंग सम प्रोग्राम व्हिच इज रिलेटेड टू द ईटीएफ. ईटीएफ मार्केट हैज कम अ लॉन्ग वे फ्रॉम 2014. 2014 में रफली 20,000 करोड़ के एयूएम से 2018 में 70,000 करोड़ से आज इक्विटी ईटीएफ का एयूएम रफली 5.5 लाख करोड़ है. It is all because of the NSE indices and unki team, which Mr. Mukesh Agarwal leads. He's a CEO and MD of the indices. इन्होंने अभी लास्ट वीक एक प्रोडक्ट लॉन्च किया था ईवी रिलेटेड, ईवी ईटीएफ. तो आई जस्ट कॉल्ड हिम अप, आई सेड कि आप लोग इतने इनोवेटिव प्रोडक्ट्स लॉन्च करते हैं तो ये मेंबर्स लोग को भी थोड़ी अगर आप लोग मेंबर्स लोग इसका अवेयरनेस कराए तो काफी फायदा होगा। एंड ही हैप्पीली एग्रीड कि हम पूरा प्रोग्राम करेंगे आपके साथ ईटीएफ रिलेटेड, सो दैट इस मार्केट को ईटीएफ के बारे में ज्यादा से ज्यादा हम लोग नॉलेज शेयर करवा सकें। सो इट्स एब्सोल्युटली वेरी डिजायर फॉर ऑल ऑफ अस कि मुकेश जी आपने आप आए हैं। आप यहाँ से प्लीज टेक ओवर द थिंग, और फॉर ऑल आवर listeners and everyone, all the market participants, give your insight about all the ETFs. Mukesh ji.
Yep. Thank you, sir. Thank you, Pawanji. Thank you, NB, for giving me this opportunity to come and speak on the Indian ETF industry and also the new indices which we have been launching. And it's really a great honor to talk to NB members on this because this topic is very close to our heart. Like as Pawanji said, in 2014-15, there was hardly any AUM of the ETFs, but after that, industry has been growing in leaps and bounds. And I will talk about all those things. So today, the way I have structured my PPT, my presentation is, first I will talk about the Indian passives, which will include ETFs and index funds, give you a brief overview of that. So basically, as we know that passive funds are typically the ones which are any fund manager just blindly replicates the index. So they whatever is there, the constituents of the index, they are blindly replicated by the fund manager and they create that portfolio. And passive funds can be done in two ways. One is ETFs, exchange traded funds, and the index funds. So for buying and selling ETFs, one has to come to the exchange through you people, or for buying index funds, one has to go directly to the mutual fund, the way they buy the mutual funds. So that is in brief. So I will talk about the passive industry with a greater focus on ETFs, talk about how the ETF size has been growing, how the trading volumes have been growing, etc. Then I will focus on two new indices which we launched recently, on which Pawanji had called me up. So one was the EV index, which is electric vehicle index, which generated a lot of interest amongst the market participants, including media. There was a lot of media coverage. And subsequently, we also launched another index called Nifty 500 Momentum 50. These are the two indices I will cover in my presentation today. And in future, whenever we launch new indices, and if NME wants, we can talk about those indices also, because one of the jobs which we perform is to keep launching new indices which we believe are relevant for the markets and on which products can be launched or which can be used for benchmarking purposes. So that's what we do. So I will move to my presentation now. So coming to my first slide, this is basically comparing the global industry, global ETF industry with the Indian passive industry. So today, if you look at global in size of the global ETF industry is around 12.24 trillion US dollars, which is 12.24 lakh US dollars. As against that, India's passive industry, which includes both ETFs as well as index funds, the size is 9.37 lakh crores. And if you look at the breakup of that, 9.73 lakh crores, the breakup is like this. 6.76 lakh crores is ETFs, 2.23 lakh crores is index funds, and approximately 33,000 crores is the commodity products, commodity ETFs, which is gold and silver. So that is the broad breakup. So if you look at the global ETF industry, it has grown at the rate of around 20%. If you look at Indian ETF industry or passive industry, last 15 years, annualized growth rate of around 55%. So basically, now question which would be asked is, what is the driving force and why the industry is growing at such a fast pace over the last so many years? And main growth has actually happened in 2015 August onwards. And that is the phase, because I remember in July 2008, July 2015 and July end 2015, the AUM of ETF industry or passive industry in India was around 7,000, 8,000 crores. So from 7,000, 8,000 crores to almost 9.5 lakh crores in the period of 9 years is really very unexpected, which none of us expected, but that is the pace at which the industry has grown. So there are two, three key reasons why this industry has been growing at such a fast pace. One was, if you all would recall, government had started disinvestment of some of its entities through the ETF route. The product was launched called Nifty CPSE ETF, on which our CPSE index, which is there, on which an ETF was launched, and government of India had used that for disinvestment purposes. That is one. And second thing is EPFO, which is Employees Provident Fund Organization, in 2015, they decided to invest 15 or a part of their incremental investments in equity markets, and that they decided that they will do it through ETFs. And since August 2015, they have been investing in equity markets through ETFs, and they basically invest through two ETFs, one tracking Nifty 50 and another one tracking Sensex 30. So I think that is, so with EPFO coming into the markets, coming into the equity markets through ETFs, that was, I think, the point of inflection. Subsequently, it has been a kind of an hockey stick growth rate. And also another factor which we can say is increasing awareness amongst the retail investors. Probably earlier 9 years back, 7 years back, 8 years back, not many people were aware of passives. Now the awareness has increased, and also from an investor's point of view, people have realized that this is a very simple, transparent, and I would call it cheap product, because today anyone wants to buy all the Nifty 50, one basket of Nifty 50 or one unit of Nifty 50 ETF. By just paying 250, 260 rupees, I can get exposure to all the 50 stocks of Nifty 50. I think that is the beauty. That's why I call it it's a cheap product. It's a cost is less than the cost of a pizza, I would say. So I think these are the few factors, and also declining gap between the returns of active versus passive funds. So increasingly, the delta generated by the active funds over the indexes or over the passive funds has been coming down. So increasingly, why should then people demand for passive funds has been growing. Now, if you look at it, the breakup globally, what is the breakup of global AUM into equity, fixed income, and commodities? Approximately 73% of the global ETFs is in equity, 16% is in FI is fixed income, 11% is in commodity. Whereas if you look at in India, 74% is equity, which is more or less the same as the global breakup. But in our case, the fixed income is slightly higher. Fixed income is 22%, as against 16% globally. And commodity is lower at around 4%. So 4% of 9.37 lakh crores is commodity, 22% of 9.37 lakh crores is in fixed income, and 74% of 9.37 is in the ETFs. Now, globally, if you look at it, US is the largest market, which is the case in a lot of other segments also. 70% of the AUM is in US, 15% is in Europe, 12% is in Asia Pacific, and 3% is other countries. And within Asia Pacific also, Japan happens to be one of the largest, accounting for a significant portion of the ETF AUM. And India, if you look at it today, the total passive is 9.37 lakh crores, which is approximately 17.5% of the total mutual fund industry AUM. Mutual fund industry AUM is around 58.5 lakh crores. So passive at 9.37 lakh crores is approximately 17.5%. And if you look at only equity passive funds today account for approximately 22% of the total mutual fund equity AUM of the Indian mutual fund equity AUM. Now, and globally, if you look at it, net inflows in the current year, 2024, first 4 months, basically January to April 2024, incremental inflows have been around $70 billion US. And in India, if you look at it, I will show the numbers subsequently. I think first 2 months, April and May, the incremental inflows have been around 27,000 crores. So I think India also, the inflows into passives have been increasing. And Nifty 50, which is, as you all know, is the benchmark index of the country, it has got 37 passive products, 18 ETFs, and 19 index funds with an AUM of rupees 3.37 lakh crores. Approximately 40% of the AUM on passive is linked to Nifty 50 today. So I'll move to the next slide. I hope my voice is clear and I'm audible. So now this is the growth story which I talked about. This is the growth chart which shows the growth story of the Indian ETF industry. So today, if you look at the ETF industry, the total AUM as on April end is 6.76 lakh crores, and total number of ETFs is 178. The line shows, the line graph shows the number of ETFs, and the bar chart shows the AUM. So from March 2008, basically, if you look at it, industry has been growing at an annualized rate of around 41%. So if you look at it since May 19, the AUM of ETFs in India was approximately 1.36 lakh crores. When I talk about ETF, it includes both debt ETFs as well as equity ETF, while equity is the significantly large portion. So May 19, the AUM was around 1.36 lakh crores. Today, the AUM is around 6.76 lakh crores. So in last 5 years, the industry has grown 5x, which again is unbelievable. Last 5 years, the AUM of ETFs in the country has grown from 1.36 lakh crores to 6.76 lakh crores, which is approximately five times. Similarly, the number of funds available today is around 178. In 19, it was around 67, 66, 67. The number of ETFs also available has grown 3 times. So even if you just look at 1 year in the financial year 24, last 1 year from May 1, 2023 to April 30, 2024, the industry ETF AUM is assets under management, has grown by around 35%. Now, if you look at this slide shows how the inflows, fresh inflows have been there into the ETFs in the Indian markets. So last year, if you 22-23 was around 60,000 crores, 21-22 was 80,000 crores, 23-24 it slightly came down around at 43,000 crores. This year, this number is shown as 5,700 crores, which is only April. But if you include May also, this number, because AMFI just released the numbers, May numbers yesterday. So if you include May numbers also, the inflows in the first 2 months would be approximately 16,000 crores in the ETF industry. Now, this just talks about the index funds. I will not talk much about it. Index funds approximate AUM is around 2.13 lakh crores. ETF is 2.23 lakh crores, and the number of funds is 213. In fact, index funds had a phenomenal growth. If you look at May 19, the AUM of index funds was only 5,000 crores. From 5,000 crores, the AUM has grown to 2.23 lakh crores. And number of funds has grown 8 times. Number of funds has grown to 213, which was only around 25 in April 19. So that is the kind of growth which we have seen in the index funds. Even index funds have been seeing good growth. FY 22-23 was 95,000 crores. 23-24 is 15,000 crores. And this year is 6,500 crores in the month of April. And if you include April and May, it would be approximately 11,000 crores. That is the kind of flows which we have seen in the index funds. So this chart, now I'll talk only about ETFs. So this chart shows the breakup of ETFs into 3 different categories. One is equity, second is debt, and the third is commodities. Commodities is mainly gold and silver, which an AUM of around 33,000 crores. So 81% of the total assets under management is equity. 14% of the ETF industry's AUM is in debt, and 5% of that money is in commodities, which is gold and silver. So basically, if you look at it till March 19, the debt was very negligible. But what changed was if you would recall, in December 19, Bharat bond ETFs were launched. So we are very proud to say that we are the ones who had created this indices, Bharat bond indices, on which the Bharat bond ETFs were launched by Edelweiss because Government of India had taken the initiative on Bharat bond ETFs. And since then, the AUM of debt ETFs as a proportion of total AUM has been increasing from almost negligible in March 19 or 3% in March 19. It has gone up to 14%. So this is a broad breakup. And today the AUM there are, I think, 5 Bharat bond ETFs which are available in the market on different indices, 5 indices, and with the 5 maturities, I think 25, 30, 31, 32, and one more maturity is there. The total AUM tracking of this 5 indices is around 60,000 crores. So Bharat bond ETFs, I don't know how many of you know basically why we are very proud to say that the Bharat bond ETFs became very successful, mainly because of 3-4 reasons why the Bharat bond ETFs took off and immediately got accepted by the investors. One is they had a target maturity. What is Bharat bond ETF? Bharat bond ETF is like any bond in any debenture or a bond which has got a specified maturity date. So that is one. And second thing is ETFs which we created, it comprised of bonds was very good with very low probability of default. Third thing, since they were ETFs, they were traded on the stock exchange. The liquidity is very high. Anytime who wants, they can liquidate the funds, liquidate the ETFs and get the funds back. That is second. And third, which is the most important thing, Can you hear me now? Sorry, sir. Sorry, I lost you.
Yes, sir, we
Pawanji, where
can
did
hear
I
you now.
lose? I got lost because of signal.
Yes, you can hear you,
And
sir.
in case my computer goes problem, then we can speak through her computer. So just Mr. Stephen, can you just allow Rushali also to join?
Surely, sir.
Yeah. So
On the same link, she
I
can
don't
join.
know, Pawanji, where did you people lost me?
So last 1 minute only, Mukesh.
Last
Last
slide,
one.
sir.
No, last line. Baki yours okay. Yeah.
Dominance of equity within ETF's debit is picking up. That's the last slide where we missed.
Yeah. इनका अकाउंट आई थिंक मुकेश जी का कनेक्टिंग इशू हो रहा है कुछ.
Hello, can you hear me?
Yeah.
Hello.
Yeah, we can hear you. We can hear you.
Pawanji, can you hear me?
Yeah, I can hear you, Mukesh ji.
Yes, sir, you're audible
No,
now. Video is also seen.
Yeah. Sorry for this problem. So yeah,
No issue,
you
no
got
issue.
in, no? Okay, sorry. Just allow my colleague also, in case my thing goes wrong, then I can speak on her laptop.
Yes, sir.
So
She
sorry,
can.
I don't know, Pawanji, where did you lose me?
The last line अभी जो आप
I
start
guess
की
Miss Rane is in.
we had covered this.
Yeah.
Bharat
So
Bond we had covered.
yeah. So I covered. Yeah. This I covered. So I was talking about Bharat Bond ETFs. Why Bharat Bond ETFs became hit with the retail investors. One was high predictability of returns. The yields on which you invested, you are expected to get those returns if you hold on till maturity. Good credit quality, because only AAA CPSE bonds were included in that. And then at that point in time, it was very tax efficient. I think these are the 3-4 reasons why Bharat Bond ETFs became very hit amongst the investors. Now, if you look at ETFs today, so number of equity ETFs, I'm talking about ETFs. So within ETFs, in equity ETFs, there are 150 ETFs which are listed and traded, out of which 120 ETFs are benchmarked to Nifty 50 and benchmarked to BSE indices. And 6 ETFs are benchmarked to other indices like global indices, mostly global indices. Now, the total AUM of this 150 ETFs, equity ETFs, is around 5.79 lakh crores, out of which 3.84 lakh crores is benchmarked to Nifty indices, and again, out of which 2.83 lakh crores is benchmarked to Nifty 50. So almost 50% of the AUM out of 5.79 lakh crores is tagged or linked to Nifty 50 ETF. Now, and around 1.84 lakh crores is benchmarked to BSE indices, and 10,000 crores is benchmarked to foreign indices. So market share in terms of number of ETFs, approximately our market share or 81% of the ETFs are benchmarked, number of funds are benchmarked to Nifty indices. And in terms of AUM, 71% of the this thing is benchmarked to Nifty indices. Now coming to debt side, there are totally 88 ETFs. AUM is around 96,000 crores. Out of 28, 25 are benchmarked to Nifty indices, and 3 would be to others. And within that, Nifty Bharat Bond Index Series is the most important, which is having around assets under management or AUM of 60,000 crores. Now, this just gives you an idea on the top 10 indices in terms of AUM. So largest is Nifty 50. We have around 18 ETFs, AUM of around 2.83 lakh crores. Number 2 is Sensex, which 11 ETFs and around, I don't know, I can't read that. 1.6 lakh crores. Then Bharat Bond ETF, Bharat Bond Index Series, 5 ETFs, 60,000 crores. CPSE, which this is the one which is was used by the government for disinvestment. It has got an AUM of around 39,000 crores. Then Nifty Bank is another one which is very popular. We have around 11 ETFs tracking Nifty Bank with an AUM of 28,000 crores. Then Bharat 22, this is another index which was used by Government of India for disinvestment. It has got an AUM of around 18,000 crores. Nifty 1D rate is basically overnight rate. This is more of a debt ETF, which is again very highly liquid, high trading volumes. Six ETFs are there with an AUM of around 13,000 crores. Next 50 has got 7 ETFs, 9,600 crores. So if you look at it, top 10 indices account for approximately 94% of the AUM, and only Nifty 50 accounts for around 42% of the AUM. Okay. 1 second, having some problem in slide share. 1 second, just give me, I'll just go to the slide share again. Yeah. No, it's not moving, it's not changing. 1 second, sorry for this. One second. Yeah. So I'll skip this. So this slide is very interesting actually. If you look at it, as I mentioned, there are 150 ETFs with an AUM of around 5.63 lakh crores. And there are 120 equity, this I'm talking about equity only. So there are 150 equity ETFs, there are 120 equity passive funds. So if you see that these 270 passive products are available on a wide range of indices. So today you have products available on 69 equity indices. So depending on what is your investment philosophy, what is your investment strategy, you have an index available for that strategy and you can choose that product. Only you have like Nifty 50, Sensex, CPSE, Bank, Next 50. Then we also have value like Nifty 50, Value 20. We have ETF on mid cap 150. We have an ETF on small cap 250. We have ETF on low volatility. We have ETF on pharma. We have ETF on healthcare, momentum, housing. So you have products available across a wide range of indices. It's for an investor to decide what is my investment philosophy, what is the theme in which I want to invest. And I'm sure he or she will get the option to invest through a passive product or equity or index fund. So that is the kind of work. So totally today we have around 69 indices on which you have a range of ETFs and index funds are available. And this is as on March 31st. After that, I believe this year almost 13-14 products have been launched, and those most of them are on the new indices. So increasingly we are seeing that we as an index provider, we get demand for a lot of new indices, new ideas on which we create the indices and new products get launched. So like momentum, today momentum we have on Nifty 200 momentum 30. What is Nifty 200 momentum 30? From the top 200 stocks, which is Nifty 200 comprises the top 200 stocks in terms of market cap. We have created an index. We select top 30 stocks based on momentum. Momentum, how do we define momentum? Momentum we define in terms of returns over 6 months, basically risk adjusted returns over 6 months and 12 months. That is what we do. Similarly, we have an alpha 50, top 50 stocks out of Nifty 300, which are having an alpha with respect to Nifty 50, and they are selected in the index. So that's what is a wide range of indices, and you will keep seeing, going forward, you will see that this list of 69 will keep increasing as we move forward. Now, this is a very interesting slide. I think it gives me a lot of, as Pawanji also said that this is one thing which is becoming very, very popular. So this chart shows how the trading average ADVs, average daily trading volume is increasing. So if you look at last financial year, average daily trading volume, that is FY24, average daily trading was 747 crores, which was only 55 crores in FY15. From 55 crores per day of trading volume, it has grown to 747. What is happening is, if you look at the current financial year, And this because FY24, the number shown is the average for the full year. But if you look at the trend, in the month of April, this number was 609 crores per day. So basically in April 23, average daily trading volumes of ETFs on NSE was around 609 crores, which increased to approximately 1,000 crores, 1,085 crores by March end. Now, if you look at April and May, April, the numbers I have given over here is 1,358 crores per day. And in May also, the numbers are around 1,200 crores per day. So that is the kind of increase we are seeing in the trading volumes. And within that, if you look at, because the trading volumes can be broken up into three parts. One is equity, debt, overnight, and commodity. Because overnight is one day, which I talked about. That is the one of the most liquid with the basically product which trades on the market. So if you look at the four categories, so in April 1,358 crores. If you look at the breakup, within that equity is around 425 crores per day. Then debt is 16 crores per day. Overnight, which is one day rate, is around 730 crores, and commodity is around 180. Commodity will be gold and silver is 180. So basically, if you look at equity ADV, average daily trading volume, has gone up to approximately 400 to 450 crores. I think that is the kind of increase in volumes which we are seeing. If you look at last April, the ADV of equity ETF was only 207 crores. And within 1 year, the trading volumes per day of equity ETFs has grown from 207 crores to approximately 450 crores. Within that, I think at the point I want to highlight is there is one ETF which has got average daily trading volumes of something like 115, 120 crores per day, which is very large. So if you, amongst all the traded stocks on NSE, if you rank the ADV of that particular ETF, it will rank somewhere between 220 to 250. So basically that ETF, equity ETF, on which the daily trading volume is approximately around 115 or 120 crores per day, it is in top 250 traded stocks on NSE in terms of ADV in the month of April and May. That is the kind of trading volumes we are seeing. That is the kind of growth in trading volumes we are seeing. And we are quite confident that the trading volumes in ETFs will only keep increasing as we move forward. So that's on the ETF. So, and we believe that both AUM and trading volumes will keep growing going forward. And what would be the key drivers in future? One, as I mentioned earlier, increasing awareness amongst retail investors. So this kind of workshops, then we also at NSE, when we create investor awareness programs, IAPs, there also we talk about the ETFs. Then reducing alpha between active and passive funds, pension funds investing in equity through the ETFs, which I think EPFO is one of the largest investors in equity ETFs. Increasingly popularity, debt ETFs and index funds, because debt ETFs and index funds is one thing which is again picking up very well. Then other thing is the expense ratios of ETFs is very, very low. So if you look at today, we have products on Nifty 50 which are available at 3 basis points, 4 basis points. So I think that is the beauty. But I don't think that is at this price you have products available anywhere in the world. So that is the kind of low expense ratio we. Makers can play an important role. I think market makers will play a very important role in equity. We are already seeing that happening, and it will only increase going forward. And launch of new passive products on an ongoing basis on new index ideas like multi-factor, ESG, global, etc., will also help in increasing the AUM and the trading volumes on the ETFs. I think that's my presentation on the ETF landscape. So I don't know, Pawanji, would like me to take the questions on ETFs now, or should I move to the new indices? I'm okay with either.
So this being on the YouTube, so you can move forward.
Okay, so let's take I will talk about the new indices launched by NSE Indices. So what I will do is, of late we have launched quite a few new indices. I will cover two indices, as I mentioned earlier also, Nifty EV index, and the second is Nifty 500 Momentum 50. So since we are having a first session on this topic, I just thought I should give some idea how the index structuring is done at our end. So basically, if you look at it, Nifty 500 is our main index, which comprises of Nifty top 500 companies in terms of market cap, full market capitalization, and average daily trading volume. And along with that, after that, we have created a new index called Nifty Microcap 250, which is the companies in terms of market cap and daily trading volume, which rank from 501 to 750. So if you include both of them, Nifty 500 plus Nifty Microcap 250, then we get an overall index as Nifty total market index. Now Nifty 500, we break it up into three different categories. Top 100 stocks, Nifty 100 is comprises of large caps, Nifty large cap index. Then mid cap 150 comprises of next 150 stocks in terms of market cap, which is the Nifty mid cap 150 index. And the remaining 250, basically 500 minus 100 large top 100 minus again 150 mid cap stocks, we are left with 250 stocks. So that is a Nifty small cap 250 index. So these are the basically 3-4 main mother indices, Nifty 500, from which we three indices, Nifty 100, mid cap 150, and small cap 2. Now, if you look at flagship index, and the remaining companies out of Nifty 100, if after removing Nifty 50, is called Nifty Next 50, which is basically companies ranked in terms of market cap from 51 to 100. So this is a breakup of Nifty 100. Now from Nifty Midcap 150, we have created three variants. Nifty Midcap 50, which is top 50 midcaps from Nifty Midcap 150. Then Midcap 100, which is top 100 midcap from Nifty 150. And this is the index on which we have Nifty Midcap Select, on which we have derivatives also trading. And Nifty Small Cap, we break up into two parts. Top 50, we call it Nifty Small Cap 50. And the second one is Nifty Small Cap 100. So basically, if you look at names of all our indices are very self-explanatory. If you look at the indices, you will get to know what that index is all about. So this is I will not talk about this list in too much detail. This talks basically, our indices can be broken up into four categories: broad-based, sectoral indices, thematic indices, and strategy indices. So broad base is basically indices like Nifty 50, Next 50, which represent the various market segments. Sector indices, we have 19 sector indices, which are various sectoral like auto, bank, financial services, IT, media, metal, pharma, PSU bank. Then theme is various themes like we also have ESG indices, CPSE, energy, infrastructure, commodities, Sharia. These are the themes, core housing. Then we have strategies. Globally, there are various strategies which are used by the investors like momentum, low volatility, alpha, quality, value, equal weight. So we have indices being used by the investors. So this is a wide range of indices. Today we have 38 strategy indices, 33 thematic indices, 19 sectoral indices, and 18 broad-based indices. Now, coming to Nifty EV and New Age Automotive Index, I will ask my colleague Rushali to talk about it. Rushali, yes.
Good afternoon, everyone. So Nifty EV and New Age Automotive Index. So this index basically tracks the performance of the companies which are active into electric vehicles and New Age automotive vehicles. So New Age automotive vehicles can be any kind of hybrid, hydrogen fuel-based vehicles or green hybrid vehicles which may come up in near future. So the basic methodology of this index is the universe is Nifty 500, and from this universe we call out the companies which are into four different groups. So group A is the manufacturer of electric and new age automotive vehicles. Group B will be the manufacturers of batteries which are used for these electric and new age automotive vehicles. Group C has been divided into three different parts. C1 will be the manufacturer of components for these EV and EV batteries. Group C2 will be the manufacturers or the suppliers of or the EV and EV batteries. And C3 will be the automotive, are the providers of the ADAS or the automotive technologies for
Mute. You're mute.
You're on mute, madam.
You're
Unmute.
mute. You're mute.
Yep. Sorry.
Sorry. So Group D will be the companies which form part of Group C, and also the companies which are part of PLI, that is product link incentives for advanced automotive and ACC batteries. SMEV is nothing but the Society of Manufacturers of Electric Vehicles, and FAME, which is faster automotive adoption of manufacturers of EV. So these are the three platforms on which the companies are listed. So the companies which form part of Group C and form part of these are the companies which form part in Group D. So this is the eligible users. From this, what we do is we select the companies which are forming part of Group A and Group B. And from Group C, we select top 5 companies from C1, C2, and C3 based on free float market cap individually. And from Group D, we select the top 5 companies which are not selected in step 2. So this is the basic stock selection criteria. Then this index is then reviewed semi-annually in March and September and rebalanced. So weight reset is done on a quarterly basis. So weight rebalancing can be done in 2 ways. So first, the aggregate weight of Group A, which is the manufacturers of EV, is been capped at 40%, and the stocks belonging to Group A will be capped at 8%, and the other stocks are capped at 4%. So this is the basic methodology for EV index which we have prepared.
Again, I think this is getting stuck. 1 second, just sorry. Again, this is.
So this is the latest portfolio as of May 31st for Nifty EV index. So if you see Group A, it forms part, it comprises of 39%. Since it is capped at 40% due to price drift, the weight has come down to 39%. Then Group B, the overall weight is around 12%. Group C, the overall weight is 19%. Group C1, the weight is 19%. C2, it is 8.2%. C3 is 12%, and Group D is 7.88%.
So basically what we have done in this index is any company which is associated with EV or new emerging auto technologies, we have included those companies in the index. One is direct automobile manufacturers. Second, we have taken the battery manufacturers. Third is which people who are providing components, etc. to battery manufacturers, we have taken that. Even companies which are into technology, like Tata Technology, etc., who are providing technology for EVs have been included. And other companies which are part of SMAV or FAME and which have done significant investments related to EV or new age automotive technology, they have been included in this index. So this slide gives you a overall view of the companies which are currently as part of the index when we have launched. And as part of any index, what we do is we keep reviewing the index portfolios. All of you know that we review Nifty 50 every year in the month of February and August, and rebalancing becomes effective March end and September end. Similarly, most of the other indices also we review twice in a year, along with this review of Nifty 50 and other broad-based indices. So this index will also be reviewed twice in a year. Just give us again, I think we're getting stuck there. I don't know what is happening. Login here. Share here. My speaker here.
So this is the performance of Nifty EV and New Age Automotive Index. So if you can see, the index has been backtested from April 2018 onwards. So from April 2018, this index has given a CAGR return, annualized return of around 20.3%, whereas Nifty 500 has given 16%. So if you can see from 5 year, 3 year, 1 year, so in fact, in all horizon periods, be it short term or long term, the index has outperformed Nifty 500. And on the calendar year basis as well, so out of 6 calendar years, this index has outperformed Nifty 500 4 times, so which is in the year 2020, 2021, 2022, and 2023. So this is the new index, which is Nifty 500 Momentum 50. So basically in this index, we select the top 50 stocks based on momentum score, where momentum score is calculated based on 6 months and 12 months risk adjusted return. So and the weights of the stocks in the index is based on the combination of its momentum score and the free float market capitalization.
See, momentum is one of the most popular investment strategies globally. If you look at globally, the investment strategies followed by various fund managers, we believe that momentum is one of the most popular strategy, which has been consistently giving good outperformance as compared to other strategies and most popular strategies basically.
So the basic methodology of Nifty 500 Momentum 50 is we have a universe of Nifty 500. From this, we take stocks which are having minimum listing history of 1 year, and then we exclude a few stocks on the basis of ADT, pledged share, turnover ratio, and the stocks which are which are hitting circuit filter for more than 20% of the time during the review period. So after excluding such companies from the universe which we have left with, we calculate a momentum score for each and every company, and then we select top 50 stock based on the momentum score. And then we multiply this momentum score with the free float market cap of those companies and find out the weights. And these weights are further capped at lower of 5% or 5 times of its free float market cap weightage. And this index is then reviewed on a semi-annual and semi-annual basis in June and December. So this is the portfolio of Nifty 500 Momentum 50. The weights are as on 31st of May. So if you see, Hindustan Aeronautics is having the highest weight, which is 6.95, and so on and so forth. And
so if you look at the breakup of this 50 stocks in this Nifty 500 Momentum 50, it comprises all three segments: large cap, mid cap, and small cap. So the large cap weightage of large cap stocks would be around 28%, mid cap stocks is around 44%, and small cap is around 27-28%. I think this is the broad breakup. So basically, by taking exposure, if you invest in a ETF or index fund which is tracking this particular index, you will get exposure to 50 stocks with high momentum. Within that, 28% would be small cap, 44% would be mid cap, and around 27% will be small cap. So I think this is about the momentum stock.
Then we have the performance of the index. So when we compare the performance of Nifty 500 Momentum 50 with Nifty 500 index, we can see that in the over the long-term horizon, in fact, over the short-term horizon also, this index has outperformed Nifty 500. So since April 2005, this index has given 24.7% of return, whereas Nifty 500 has given only 15% return. And in 10 years also, it has given 26% return, where Nifty 500 has given 15% return.
These are annualized returns. So
Annualized.
if you look at last 10 years, per year return of Nifty Momentum 500 Momentum 50 would be 26.4%. As against that, Nifty 500 is given 15.1%. So if you look at 1 year also, Nifty 500 Momentum 50 has given 76.2% returns, and Nifty 500 is given 35.2% returns.
So, and on comparing on the calendar year wise basis, so Nifty 500 Momentum 50 has outperformed Nifty 500 in 13 calendar years out of 19 calendar years.
So I think that's in from our side. In case if any questions, or I don't know what is the form structure we have. So Pawan ji.
नहीं, काफी एडुकेटिव आपका ये है पूरा slide, but since all have attended via YouTube, so we had left not that options of asking questions. बट एनी हाउ
Okay.
हम लोग आपका लिंक ये लिंक शेयर कर लेंगे सबके साथ एंड विल शेयर द मेल आईडी ऑफ योर्स. सो इफ एनी ऑफ आवर व्यूअर्स और members have any questions, then via NB they'll come to you.
Okay, that's great. Thank you very much. And
Mr.
thank you very much to NB for giving me this opportunity. It's really nice speaking to all of to NB and NB members. Thank you very much. Have a good evening.
Thank you.
Thank you very much. I request Mr. Pawan Bagri sir to just give a word of thanks.
No, thank you, Mukesh ji. In such a short notice, you came and presented such a nice thing. I think, yeah, आने वाले time पे we'll have some more programs with you once we get the feedback, and definitely हम लोग आपके साथ टच में रहेंगे. निफ्टी 50 को आज कौन नहीं जानता है? निफ्टी 50, बैंक निफ्टी, फिन निफ्टी, मिड कैप, ये सब प्रोडक्ट, सीपीएससी, तो these all have become so tradable products in the market. So anyhow, thank you, Mukesh ji. Thank you very much. Thank you
Thank
for
you very
this.
much. Thanks. Thank you, sir.
Thank you, sir. Thank you.